Thank you, Edric and Melissa. Glad to be here. I'm honored to be a moderator today for our first panel session. This session will be in English under the theme Investing During Bear Market. Duration will be 40 minutes, 30 minutes for discussion, and 10 minutes for Q&A. Before starting the session, a kindly reminder to all Nano Squad, please ask the question in comment section on YouTube with the format special session, space, name, space, question, and to whom. We will choose the best question and each of them will get 5,000 NBT. Of course, I'm not alone. I'm accompanied by three great speakers today. We have Mr. Fuganto Widjaja, the Senior Advisor of Nanovest. Mr. Fu currently serves as the Executive Chairman of Singapore-listed mining company Golden Energy and Resources. Mr. Fu had successfully built the energy and mining companies under his leadership from scratch to over $5 billion in market cap and revenue, and having investment in multiple countries across Asia, Australia, and USA. And we have Mr. Mark Tan, CEO of Meadowfield Capital. Mark Tan has over 20 years in the asset management industry in Singapore and China, managing Asian and global portfolio. He was previously a senior portfolio manager at UOB Asset Management and then Bank of Singapore before moving on to become CIO at Sinarmas Multi Arta and now the CEO of Meadowfield Capital. And of course, we have Mr. Genta Wira Anjalu, currently serves as CIO of Sinarmas Asset Management. Mr. Genta is one of Indonesia's leading investment manager by assets under management, with managing close to 51 trillion rupiah as of 29 July 2022. I'm so excited to say hi to our speakers. Hello, Mr. Mark, how are you?
Hello, Brenda, I'm good. Hello, everyone.
Thank you for joining us here today. Mr. Fuganto, how are you? Glad to see you today.
Great. Good to see you.
And of course, Mr. Genta, how are you?
Thank you.
Pleased to meet you. Gentlemen, without further ado, let's begin our discussion today. As we all know, crypto market has crashed down more than 60% from the all-time high level in last November. And I think global stocks are bouncing back from their recent drop. What is your thought in this current market situation, Mr. Genta?
Okay, maybe can we share screen? Yeah.
Yes.
Okay. I want us to flashback a bit to 2022, so that we can really understand what's really going on in the market. In our opinion, we see that there is a great disconnect phenomenon between the market and the economy, where market movements are driven by liquidity rather than economic fundamentals. As you can see in the chart above, when the economy is facing uncertainty due to COVID-19 crisis, some even see that the COVID-19 crisis can cause L-shaped, I-shaped economic growth, and the market should continue to experience a decline if the market follows the economy. But surprisingly, the market was rebound and always making break new high. What made the market rebound? Vaccines? Not yet, still far away in that condition. The answer is the Fed, which announced unlimited QE stimulus. And in the lower left chart, it can be seen that market movements are more in line with the Fed's stimulus than with EPS growth, which actually grew negatively. Next slide. Okay, as a result, the market is very dependent on liquidity from the Fed and various central banks. It's like drugs, very addictive, in our opinion. No wonder investors are very worried if the Fed stops liquidity or even withdraws liquidity. The question is, what made the Fed close the tap? The answer is high inflation. Investors are very worried that the Fed will close the taps, especially since the inflation rate is very high. That explains why in survey conducted by Bloomberg at the beginning of the year, tapering and inflation became the major concerns of investors. If in 2013 there was a taper tantrum phenomenon, Then in 2021 and 2022, there will be a tantrum without tapering phenomenon. Investors are already jittered to see the inflation rate. Next slide. Then how about the market condition in 2022 itself? The global market experienced a decline due to fears of inflation and tapering by the Fed in first half 2022. While in second half 2022, the theme was heavier on growth concerns and fears of recessions. But there is one interesting thing here. The market actually rebound as recession fears rose. Why? Because the market sees this can hold the Fed to close the tap immediately. We still see the direction of the Fed policy is still the key until 2023, and the market is quite comfortable with current condition than before. And the market sees the Fed will cut interest rate again in May 2023. And next slide. Okay, this is the last slide. This is pretty good indicator to see the current market mood. As seen on this slide, even though fears of recession are rising, market sentiment has actually improved. Even some indicators have shown bullish signs. I think that's all for the answer.
Thank you for your comprehensive answer. And I'd like to hear more from Mr. Pu. What do you think?
Yeah, I think post-COVID, it is yes, there is a tapering. So it's expected that, like what Mr. Genta said, most of the liquidity-driven bull market in 2020 to 2021 is going to come down. Yeah. So a lot of there's two things, right? There's a helicopter money. That's what they call it. There was the term from the Bernanke, so one of the ex-Fed chairman during the crisis of 2008. So it's like throwing money out of helicopter, right? So everybody become flush with cash. So what do? You buy a lot of stocks, and not just stocks, but handbag, watches, cars, everything that is online shopping, right? So because of the liquidity, so a lot of asset classes are inflated. Now that the Fed is basically tightening, what is called tightening is increasing interest rates and also trying to reduce the money supply. So they are trying to take back the helicopter money that they were flooding the market with. So of course, there's going to be some liquidity problem. So people are going to sell their Rolexes and handbags and so on. So we see a crash in all sorts of asset class, not just crypto or tech. But the second phenomenon is after the COVID, yeah, people start to go out and so on. Many of the names that actually benefited from people staying at home, for example, Netflix, Zoom, and so on, have also corrected. This is normal because now we rather go to events rather than sitting at home and watching the screen. So oil is going to go up, right? Transportation is going to be back. Commodities are rising because of consumption rising, and the stuff that is online that we all enjoyed previously has come down. But that being said, the past few weeks has been very interesting. The meme stocks are back. So GameStop, Bed Bath and Beyond has been blowing up again. So it seems like deja vu, yeah, in 2021 during COVID. So it seems that the people have brushed it off, and the market is popping back a little bit.
Okay, thank you for your
Thank you, Brenda.
answer. How about you, Mr. Mark?
Yes, hi. So what I see is that we are going back into a more normalized environment now, of the at least neutral monetary policy, from easy monetary policy in the past. So we're going to get, quite a wide differentiation in performance across stocks, and asset classes. For example, I think during the pandemic, because of the liquidity, and in 2021, there were a lot of meme stocks and loss-making companies, which were, rising up. But now, now that liquidity has normalized and is getting tighter, investors are going to differentiate, what they want to invest in, what they're going to buy. So I see that there's going to be a big differentiation in performance across, companies with strong resilient earnings and companies which are loss making, and whether there's a question mark on whether they will ever be profitable at the end of the day, and have good, and when the question of their business models as well. So I think that we can still get performance in the stock market, but we have to be very selective in what we invest in and what we pick.
Okay, thank you for your answer. We'd love to know our speaker's opinion as investor about how positive or negative you are in this market situation. Do you still invest in capital market, or have you moved on to invest in a safer and more stable asset? I'll start from Mr. Mark.
Okay, so I think stock markets go through cycles, over the short term. So certainly, I think we did go into a bear market, recently. If you look at the S&P 500, but over the long run, if you take many years, right, the stock market always goes up, and that's due to population growth, due to economic growth, and due to growth in earnings in general. So I will not say that the capital markets are dead. They go through cycles like what we are seeing currently now. But if investors have a longer term horizon, I think it's still a good place to be in both investments in equity markets, in order to make good returns over the long term. But you need to have a longer term time horizon.
Okay, thank you for your answer. How about you, Mr. Fu?
Yeah, so capital market for sure, right? I mean, I wish I invested in Bed Bath and Beyond. I'll make 5 times my money. So it's not that it's a bear market. I think there's always going to be companies that will fall in a capital market, and there's always going to be companies that will rise. So at any one time, when they say buy low, sell high, isn't it the best time when it's low, right, to buy? But of course, we have to be careful. Like what Mark said, we have to invest for the long term. So I think if we are expecting to make a quick buck, within 1 week, within 1 month, that could be risky. Doesn't mean it couldn't be possible, but it could be risky. But if we put part of our savings into a basket, I like to think about basket. So what is interesting about Nanovest is that you can actually buy these indexes within the app, and so we don't really have that risk of one company having a problem and eating up our money. But as the tide rises, then it lifts up all the boats, right? So it will help the entire industry pick up. So I like to have exposure to the things that maybe Asia doesn't have, which is the big tech names or the big pharmaceutical names. So that one, I think, in the long term, is still going to have very huge competitive advantage for growth. So I think we definitely have to keep investing. But of course, some people might like to buy property, might put some money in real estate, or commodities. That's fine. But I think capital market is definitely always should be part of the portfolio.
Okay, thank you for your answer. And how about you, Mr. Genta?
Okay, I think diversification is the key to invest when uncertainty is high enough. Yeah. What must be understood is that each asset class has its own cycle, and sometimes we are not careful and precise enough to do the right timing. Yeah. So investing in various asset classes is very important. But the most important thing before investing, determine first investment objective. Secondly is risk profile, right product, and choose the right investment platform like Nanovest.
Okay, thank you for your answer. So we can say that we might see economic and market situations still remain uncertain, but there is still hope and potential opportunities for investors and traders, isn't it?
Yeah.
Yes, for sure.
Okay, we've been talking about investment, bear market, and I believe each investor has different strategy to cope with the situation. So, Mr. Fu, do you have a specific sector that you are investing in? For example, tech companies have gone down a lot. What do you think is happening? Is this sector considered cheap right now?
Yeah, so I think not all of the big tech has fall too much. I think some of the very solid names like Apple and even a Tesla. I mean, Tesla is quite debatable, but it's back. Yeah, it's dropped a lot, but then it's back up. So I think tech sector is definitely U.S. tech sector is definitely something I'm looking at because that one they have a lot of advantages that we cannot go without. Like for example, all of us right here, we are either using Apple, Google, or Microsoft, right? From a computer, laptop, iPad, whatever it is, we're using one of those people software. So we cannot get out from that. And I'm quite also respect the innovation, yeah, that they have done, with the automobile, with the new renewable, with the new EV and so on. So I think that is something that that's fundamental. Maybe it's high valuation or maybe not, but it's something that the world will definitely require. So that's my part of my portfolio always.
Thank you for your answer. I'd like to hear more from Mr. Genta. How about you?
Okay, for interesting sector to invest for Indonesia, yeah, I believe the theme for year end and next year will be back to consumption again. Normalizing of soft commodity price will help the margin recovery, especially on consumer staples. Construction may also benefit from the new tender from IKN, yeah, or new capital city projects. On tech sector, lately the intensity of competition is easing, especially in e-commerce and food delivery spaces. Both C or Shopee, yeah, and Goto have raised commissions in Indonesia by 150 to 100 bips. So far, the average order value has increased, especially for Shopee in Thailand and Indonesia. This platform raised the bar for free deliveries.
Okay, thank you for your answer. Those are very nice insights for investors to take into consideration. Moving forward to commodities sector, we know commodities like oil and gas have been performing very good this year, as good as last year. And what is your thought on this, Mr. Fu? Will the price continue to rise?
Depends on the sector. I think oil has actually come down. It has actually been back to before the war, so it's around below $90 in the US, and that's because there's a demand slowdown overall, right? So too much of a high price will actually reduce some demand. People are buying smaller cars. People are just maybe not traveling too much if they cannot afford it. So there's a little bit of normalization in that sector. But I think one of the big theme that is gonna continue to grow is the renewables and the new economy metals, what they call it, right? So to make electric cars, to make batteries, to make more electrified infrastructure, you'll need a lot of copper, nickel, maybe some iron ore, and some of the lithium, yeah, and cobalt and so on. So those metals, we've seen a little bit of a rise, but I think the world will continue to be short of it because everybody is. Imagine if you change every oil car, which some countries are actually mandating by 2030 or 2045 or something, that all of the cars on the road must be electric, right? So imagine to rebuild the entire oil infrastructure that we have done so the past 100 years to replace everything, how much of the commodities will need to be dug out of the ground. So I think that one is still going to be quite strong. There's going to be cycles, of course, but the overall medium long term trend should be quite well supported.
Thank you for your answer. As we know from the news, inflation is at the highest in the United States. Last time I read the report in July was as high as 8.5%. Do you think the Fed hiking up the interest rate is helping with the inflation situation at all, Mr. Mark?
Yes, I think they have to do that. First of all, I think right now inflation in the US is broad-based. It's not just due to the rise in commodity prices alone or oil prices, as you can see that even in the July inflation print, the core, inflation, which is X food and energy, was still at a pretty high rate of about close to 6%, which is still a lot higher than in the past. So I think inflation is embedded into expectations. The labor market is tight, so workers are demanding higher wages. The housing market is also tight too as well. So rentals have been rising. So the Fed has to raise rates in order to cool, the housing market, and also to cool the economy in order to reduce wage expectations. So this is what they have to do. So in order to bring down expectations and bring down inflation.
Thank you for your answer. What is your thought on this, Mr. Genta?
Okay, what must be understood is that the composition of US inflation drivers has a different structure with the euro, where the euro inflation focus on energy or cost-plus inflation, while the US drivers for the inflation it's more broad-based, where the increase in the price of goods and energy is quite similar, both in terms of cost-plus and demand pull. So I think interest rate hikes are needed to overcome inflation in our view.
Okay, thank you for your answer. That's very insightful. And now we are going to do Q&A session. I already have questions from the audience. I will read the first one. From Effie Ginda to Mr. Mark. Can you give us tips on how to manage our assets in crypto industry, and what do you think about the crypto industry today and in the future? That's for Mr. Mark.
Well, I think the Web 3.0, I think, is here to stay. There is definitely room for certain crypto investments to work out in the future. But like in stocks as well, it's the same as crypto. You have to be able to pick the winners and the losers. The ones that are the particular cryptos that are really solid, that have good fundamentals, that can really potentially be widely adopted and have a good use case or have a wide following in order to make money on it over the long run. Yeah, but I think the crypto industry is still new and developing, so there will always be a lot of certain crypto investments that will not make it, that will lose money over the long run. But there will be select few winners, and you have to be there to pick the right. You have to be able to pick the right ones in order to succeed.
Okay, thank you for your answer. So pick the right one in order to succeed.
Yeah,
that's nice quote. And the second question is from Diki Kasali to Mr. Genta. What factors and conditions cause a bear market to last longer, and what are the signs?
Okay, I think if US inflation has not yet reached its peak, which causes the Fed rate to continue to be aggressive in tightening, and what needs to be remembered is that the current market is more liquidity driven than economic driven. Yeah.
And the next question. Wait a moment. From Antonius Henry Eka to Mr. Fuganto. How Nanovest can be a leader on Indonesia with real use cases for sure, especially in bear market?
Yeah, so I think the bear market is actually a good thing. Yeah, this is maybe controversial, but what we see is that then we kind of reveal who are the solid player and who are the ones who are shaky, right? So we've seen a few crypto investment houses that are basically in liquidation because they have it's a lot of hype, but then the fundamentals are quite not so sound, right? So what Nanovest or Nanobyte is doing is that even though it's a crypto token, but it's backed by some partners, which are large financial institutions. And I think we've seen, first of all, that contributes to the trust in the token, in the solidness of the fundamental. And because of that, then people will be willing to use it or invest in it. So, and I think what the team has done, I've seen, is that they are now experimenting, right, with being able to use NBT for certain investment or certain exchange. Maybe buy a house, get NBT. Maybe buy Pulsar, get NBT. So these are very, very early. And from what I've seen with the technology, is that the blockchain or the crypto token itself has a very game-changing value, yeah, for things like being able to transfer the ownership of one asset to another person. Quite seamless, low cost, and instant, right? So that in itself is something that will, it has an intrinsic technology there that will make it useful over and above the current monetary system or the current exchange system. So I think NBT is innovating. I wouldn't want to spoil it too much. I think the NBT team will probably reveal more. But during the Bali launch, you will see that a lot of things can be done with NBT. So hopefully that will showcase some of the capabilities for Nanobyte and Nanoverse.
Thank you for your answer. I still have question to Mr. Fu. What is the best strategy for entry in the current bear market? Like, what is the ideal percentage of capital to invest?
So I think Mark or Genta later on may add on, but I learned a lot from these two gentlemen who are actually much more wiser than me in the investment world. So there's this thing called dollar averaging, right? Or there's basically what it means is that we don't put everything in one basket for now, right? We reserve some cash. Of course, we don't try to borrow too much money and buy the asset. But dollar averaging, Mark, maybe you can add on. We buy it over a period of time. So if the asset goes down, we keep buying. Asset goes up, we keep buying. And in the long run, this is the statistic, yeah. In 20 years, it's guaranteed to make money, right? In 10 years, it's more or less 50-50 chance, but you won't lose the capital. But below that, of course, it's difficult to time it. So maybe Mark, you can take on, continue this.
Yes, hello. Yeah, so I think my strategy of cost investing is that even in a bear market, we should still continue investing. In fact, we should take advantage, of lower prices, to invest. It's very hard to time the market. We do not know when the rebound will happen. So what we do is that we'll put in a certain amount of money, every month over time, to take advantage of lower prices, and eventually the bear market will go away. I mean, the bear market can last for as short as 2 months, as we saw during COVID, to maybe about 3 to 4 years. But we really do not know how long it's going to take. So I think statistics have shown over time that we had an equivalent period of this, in the 1970s, when there was high inflation and there was monetary tightening, and there was even a recession. But in the 1970s, you could still see that stocks made money over the long run from 1970 to 1980, and you could actually even take further advantage of this. If you do, a disciplined dollar cost averaging into a good diversified basket of stock investments and other types of investments, gradually over time. So that would be my investing strategy, to deal with the current market volatility conditions at this point.
Thank you for your answer. Maybe Mr. Genta wanna add some?
Maybe there is very complete explanation from Pak Fuganto and Pak Mark. There is no addition from me.
Okay, those are valuable lessons we can take note from our speakers. So we have come to the end of our first panel session. Let's take a picture together. Please look at your camera and give me your best smile. On 1, 2, 3. Cheers! Okay, thank you so much, Mr. Fuganto, Mr. Genta, and Mr. Ma for your time. We surely learned so much from our session today. Best of luck for all of you. And to our audience, stay tuned for more great session and surprise in Nanovest Summit 2022. I'm Brenda Andrina. See you.
Thank you.
Thank you.
Thank you.